Welcome to the Deep Dive.
Great to be here.
Today, we're jumping right into mADNA's first quarter 2025 earnings call.
Yep, got the transcript right here.
And for you, the learner, listening in, our goal is simple. Cut through the noise, the jargon, and pull out the really key insights. What's happening? Where's the company going?
Exactly. Let's make sense of it.
Okay, where should we start? Maybe the top line numbers.
Good idea. So financials first. Q1 2025 revenues came in at $108 million.
Okay.
Now, most of that $86 million was product sales, mainly their COVID vaccine, and the other $22 million was, well, other revenue streams.
And $108 million, was that expected or surprise?
Pretty much in line with expectations, actually. They flagged this, the seasonal nature of respiratory vaccines. Sales usually pick up later in the year.
Right, seasonality. Okay, so revenue on track, but what about the bottom line? Profit? Loss.
Yeah, they posted a net loss for the quarter. It was $1 billion.
$1 billion. That sounds like quite a bit.
It is a big number, no doubt. But, and this is important for you, the learner, it's actually an improvement.
An improvement?
How so? Well, compared to Q1 last year, 2024, they lost $1.2 billion. So this quarter's loss is $24 million smaller.
Okay. So less of a loss. Maybe those cost controls are starting to bite.
Seems like it could be part of the picture, yeah. It suggests things are moving, directionally at least.
And how does that translate for investors? The loss per share?
That also improved. It came down to $2.52 per share this quarter, compared to $3.07 a share in Q1 2024.
Okay, consistent improvement there. What about their cash reserves? Do they have enough runway?
They finished the quarter with a pretty solid $8.4 billion in cash and investments.
Still a lot of cash.
Definitely. Although it is down from the end of last quarter, Q4, when they had $9.5 billion.
And they said why it dropped.
Yeah, they pointed mainly to the operating loss we just talked about, funding the operations and the research.
Makes sense. They're investing, burning cash to build things. Let's talk more about that spending. Cost management must be huge for them right now.
Absolutely critical. And it was a big focus on the call. They really highlighted a 19% drop in their combined costs. That's cost of sales, R&D, and SG&A compared to Q1 last year.
19% is significant.
It really is. And what's more, they pointed out this is the third quarter in a row they've managed double-digit percentage cuts year over year in R&D and SG&A.
Wow. Okay. So a clear trend of tightening the belt. Did this affect their outlook for the rest of 2025, the revenue forecast?
Interestingly, no. They kept their full year 2025 revenue guidance the same, still aiming for somewhere between $1.5 and $2.5 billion.
That's quite a wide range.
It is. They expect about $0.2 billion, so $200 million. In the first half, again, because of that seasonality.
And the wide range, why so much uncertainty?
They mentioned a few things. Vaccination rates, how many people actually get the shots, competition, obviously.
Yeah.
The size of the market for their new RSV vaccine, if it gets approved. And just the timing of approvals in places like Australia, Canada, the UK, lots of moving parts.
Got it. External factors. And does that $1.5 to $2.5 billion include potential sales from new products coming online this year?
Good question. No, they were clear about that. The current guidance for 2025 doesn't include any revenue from new products.
Why not? If approvals might come soon.
Because the timing of those FDA approvals for the 3 products they filed last year is still, well, unknown. They don't know when or even if they'll get the green light within 2025, so they're playing it safe on the forecast.
Sensible. Better not to count your chickens. What about projected spending for the full year?
Okay, for 2025, they're projecting cost of sales around $1.2 billion. R&D expenses, that's the big one, around $4.1 billion, and SG&A about $1.1 billion.
Still significant investments, especially in R&D.
Definitely, which leads into their longer-term cost stretch.
Right. How do they plan to get from these spending levels to, profitability?
They laid out a plan. They're aiming to cut another $1.4 to $1.7 billion in costs by 2027.
Okay, more cuts.
Yeah, and the big goal here is to hit cash cost break even in 2028. Basically, cash coming in matches cash going out from operations.
Break even by 2028, ambitious. How do the numbers track towards that?
They give some updated forecasts. For 2026, they see JAP operating expenses between $5.4 and $5.7 billion. They estimate the cash cost equivalent is about $4.7 billion. And for 2027, GAAP expenses projected between $4.7 and $5 billion, with a cash cost midpoint around $4.2 billion.
So a clear downward path year on year.
Exactly. If you look big picture from 2023 to 2027, they're targeting a total cut in annual GAAP expenses of over $6 billion.
$6 billion?
Yeah, it's a 55% reduction over 4 years.
Yeah. From
roughly $11 billion down to $5 billion or less. It's a major overhaul.
That's quite the transformation financially. Okay, let's shift gears. What about the products themselves, the pipeline updates, regulatory news?
Lots happening there too. They filed 3 key things in 2024. First, their next-gen COVID shot, mRNA 1283. The FDA decision date, the PDUFA date, is May 31st.
Very soon then.
Very soon. Second, their RSV vaccine for adults 1859. That's mRNA 1345. PDUFA date for that is June 12th.
Also quite close.
Right. And third, the combo flu and COVID vaccine for people 50 plus, mRNA 1083. That one's been delayed.
Delayed. Why?
The PDUFA date got pushed into 2026. The FDA basically said they need to see efficacy data specifically for the flu component before they can approve it.
Ah, okay. So more data needed there. What about their standalone flu vaccine? Any news?
Yeah, mRNA 10010. It's in a phase 3 efficacy trial. Yeah. And they said they've already hit the number of flu cases needed for an interim look at the data.
So we might get early results soon.
They expect that analysis by this summer. So yeah, could give us an early signal.
Okay, promising. Any other vaccine updates? CMV? Norovirus?
Yep. The CMV vaccine, mRNA 1647, showed good results in phase 2, strong antibody responses lasting 3 years. They're expecting phase 3 efficacy results later this year, 2025.
And Norovirus, wasn't there a hold on that trial?
There was, but the clinical hold has been lifted now, so the phase 3 trial is back on track. Potential approval could be 2026, maybe 2027, depending how fast the cases accrue in the study.
Good to see that moving again. What about beyond vaccines, their therapeutic pipeline? Rare diseases.
Right. For propionic acidemia, or PA, the main registration study is ongoing. They're thinking possible approval in 2027. And for methylonic acidemia, MMA, they plan to start the key study this year, 2025, maybe looking at a 2028 approval.
And the big buzz lately seems to be around oncology, cancer therapies.
Definitely a growing focus. They're moving their checkpoint program, mRNA 4359, into phase 2 trials.
Checkpoint inhibitor, like Keytruda or Opdivo, but mRNA-based.
Sort of analogous, yeah. They're testing it in first-line metastatic melanoma and non-small cell lung cancer based on what they called encouraging early data.
And the goal for oncology approvals.
They're targeting regulatory filings for this and other cancer programs by 2028.
Okay, so a lot cooking in the pipeline. Seems like they're having to make choices about where to put their resources.
Exactly. They specifically mentioned a strategic shift. They decided to deprioritize or put less focus on the flu-COVID combo vaccine for the younger adults, 18 to 49.
To focus on the older group.
Yes, focus on the 50-plus combo vaccine and, importantly, to free up investment for that oncology pipeline we just discussed, shifting resources towards cancer.
Makes sense strategically. Okay, let's zoom out again. The market environment. What did they say about COVID trends, competition?
They acknowledged seeing lower COVID vaccination rates in Q1 compared to last year.
Expected, maybe?
Probably reflects the shift, like you said, towards routine seasonal vaccination, more like the flu now. But they're still seeing opportunities. They won a tender to compete for COVID vaccine business in Europe, and their updated vaccine, EMEA, got approvals in Australia, Taiwan, the UK, Switzerland, so international progress.
And their view on the need for COVID shots going forward?
Management emphasized they still see a strong need, particularly for older adults and high-risk groups. They pointed to data showing vaccine effectiveness against severe outcomes, death, hospitalization.
And market share. Are they holding their own against competitors?
They believe so, at least in the U.S. They said based on script data, their market share remains strong.
Okay. Now, the earnings call always has that Q&A session. Did anything interesting come out of the analyst questions?
Yeah, a few useful clarifications. On that flu-COVID combo delay, they confirmed it was direct FDA feedback requiring that phase 3 flu efficacy data. No way around it.
Right.
For their melanoma cancer therapy, Entice-Marin, they still think a 2026 readout for the phase 3 study is possible. It's event-driven, depends how quickly things happen in the trial.
And other cancer trials.
Enrollment for the non-small cell lung cancer study is going well, and the phase 2 kidney cancer study is fully enrolled now. So progress there.
What about their general interactions with the FDA on all these filings? Any red flags?
They described it as business as usual. So they have no current concerns about meeting that May 31st PDUFA date for the next-gen COVID vaccine.
Good to hear.
They also mentioned, maybe relevant for future requirements, that their big vaccine trials, COVID, RSV, CMV, Norovirus, were all run as placebo-controlled studies.
Ah, the gold standard. What about picking the right COVID strains for next season's vaccines? How does that work?
They explain that's really up to the regulators, WHO, EMA, or FDA. They decide which strains should be targeted. Updates on that are expected pretty soon, within the next month or so.
Okay. And for that delayed flu-COVID combo, will they have to completely refile the application once they have the flu data?
That's apparently still under discussion with the FDA. Depends on the consultation.
Let's circle back to cost cutting. Any more color on how they're achieving those savings? Is it just trials ending?
That's a big part of it, yeah, the natural wind down of large, expensive phase 3 studies. But they also stress the focus on hitting that 2028 break-even target, driving efficiency in procurement operations. It's a company-wide effort.
Okay. And that norovirus issue, the GBS case, any updates?
Just confirmed the hold is lifted. No other cases have popped up. They did note, though, that establishing causality for really rare events like that in trials is inherently difficult.
Understood. And finally, reaffirming the oncology push.
Yes, they explicitly linked the advancement of the checkpoint program to the decision to pull back investment from the younger adult flu-COVID combo.
Yeah.
Oncology is a priority. And interestingly, they said they have no current plans to license out or partner that checkpoint program. They're keeping it in-house for now.
Okay, that was a lot to unpack from one call. Let's try and synthesize this for you, the learner. What's the big picture here?
Yeah, stepping back, I think what emerges is a company clearly in transition. They're grappling with the changing dynamics of the COVID market, moving towards seasonality.
While managing existing vaccine revenue.
Exactly. And at the same time, making really significant strategic investments in their therapeutic pipeline, especially oncology, which looks like a major future focus.
And underpinning all that is the cost discipline.
Absolutely. That relentless focus on cost reduction, the clear path laid out towards that 2028 break-even target, that provides a crucial long-term framework for investors and observers.
So key things to watch.
Definitely those near-term FDA decisions, late May for the next-gen COVID shot, mid-June for RSV. Yeah. Those are huge. The delay in the flu combo is a setback, but something to track. And of course, any more data coming out of that oncology pipeline, especially the checkpoint inhibitor, that seems like a potential game changer down the road.
So you could say this call shows a company balancing today's realities, the vaccine business, with really ambitious goals for tomorrow in treating disease.
That sums it up pretty well. It's a complex balancing act.
So the learner, reflecting on all this information, the financials, the cost cuts, the pipeline shifts, the market context, what stands out most to you, what lingering questions does this deep dive spark about mADNA's path forward, or maybe even broader trends you're seeing across the whole biopharma industry?